I found a cheaper Texas-Pacific land. In this video, we will talk about LandBridge. This is a company very similar to TPL, Texas Pacific Land. And in this video, I will explain my bull thesis on this one. In case you are new to this YouTube channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade, and I have achieved a performance of 25% per year. Thanks to TPL, thanks to opportunities like LandBridge and other quality names. So yeah, in this video, you will have my complete thesis and how I see the situation. And if you like what you hear, if you like what you see in this video, you can do your own due diligence. This is a company, a stock that has IPO'd in 2024. LandBridge is a company that owns lands in Texas, similar to TPL. This is a royalty company, similar to TPL. They have 90% margins, similar to TPL. They focus a little bit on oil, like TPL, but mostly on water. Okay, very well. They are better positioned than TPL when it comes to AI, data centers. They have a better tailwind for building data centers in Texas. Okay, very well. The company was created in 2021 compared to TPL founded in 1888, and the valuation is different. When TPL has a P ratio of 80 or more, LandBridge has a P ratio of around 30. So you get a similar business model with similar margins, similar kind of investments, similar position for the future. You would argue that LandBridge is better positioned for AI stuff, and you have a different valuation. So let me explain what I mean, and let's start. Okay. I have been a TPL shareholder for 4 years. I bought the stock in November 2020. Now I recently sold the stock because if you check the DCF for the stock, even if you have a very optimistic view about the company, if you think the earnings will grow 25%, if you think the TPL deserves a P ratio of 35, when you do a DCF, discount cash flow model, still the company is overvalued. In all the scenarios, TPL is overvalued. You have the inclusion to the S&P 500. You have a lot of momentum. The stock is a triple in 2024. So yeah, I think I will watch it, monitor it from a distance, and now I'm getting very interested in LandBridge. I have been following LandBridge for a few weeks. I have talked about it with my students. They have the prior information, obviously. And let me tell you how this works. If you go to Guru Focus, if you go to financial websites, and if you type LandBridge, you will find crappy information. And if you don't know how to analyze numbers, you don't know how to analyze LandBridge. You will not be able to analyze LandBridge. So the goal with this video is to explain very simply how they work. Okay. LandBridge Co. is engaged in managing land and resources to support and promote oil and natural gas development. It generates revenue stream from the use of its surface acreage, the sale of resources from land, and oil and gas royalty. Very, very similar to TPL. I believe if you watch this video, you want to invest in a royalty business, this is your opportunity. You have gross margins that are very high, and then operating margins are a mess. Net income margins are a mess. Free cash flow margins, that's 40%. Return on invested capital, that's a mess. Forward P ratio about 40. Yes, that's very tricky. Maybe you will not like the numbers. If you scroll down and if you look at the history, the track record of revenue and net income, you see that they don't have track record because they IPO'd in 2024 in July. So it's been a couple of months, but it's very recent. Even if you go to the quarterly, you see that this is a mess. So if you don't know how to analyze the numbers, you just look at the charts, you see some red, and you quit, and you dismiss the investment case. That is okay. That is not for everybody, I guess. The stock IPO'd in summer 2024. When you do an IPO, when a company becomes public, you have some legal fees. These are one-off events, one-off costs, and these are very high costs. You pay the lawyer, you pay the accounting stuff, and the price of going public is what you can see here, the red bars. So if you want to normalize the earnings for the company, to calculate the PE ratio or whatever, You need to remove this because these are the costs that will be paid once in 2024, and that's it. Similarly to stock options, they gave a bunch of stock options, class A, class B shares. They gave us a lot of stock options to employees. That's it. That's a one-off event because you have more shares now. The company is public, more shares available. You give some stock options. You'll have, look at this. This is a huge, huge SBC. Boom, SBC. So it's a one-off event. It will not occur every month, every year. That's just a one-shot. But that affects all the metrics, the P ratio, the margins. That are the one-off event, the one-off cost affects everything because you have a huge SG&A and you have a lot of debt. Now we are going to start talking about the company. LandBridge has a key difference with TPL is that it's a young company and they need to grow. A few months ago, they only had 100,000 acres of land. I mean, let me write some stuff so it's more clear to you. Where is it? Where can I write? Paint. For TPL, TPL, they have 900 acres of land. Okay. For LandBridge, they at the beginning they had 100 acres of land, and then they wanted to grow more, so they took some debt to do an acquisition, 200, and they used the proceeds from the IPO to acquire more land. And now, 1 week ago, 2 weeks ago, they did an acquisition, increasing their number of lands at 250k acres of lands. Okay, we are in the same area. Texas, Permian Basin. We have different locations for the Permian Basin, but I won't elaborate on this one. You have a contiguous land for LandBridge, so you can have the water transportation. That's very convenient, but again, I won't elaborate on this one. That's a little bit too technical. This is the same business model, same margins. You will have 90%. 90% gross margins. They don't have many employees. They don't have marketing costs. They don't have costs. You just have to pay the employees. You have a couple of employees and that's it. And the company has some debt. LandBridge has some debt to acquire more lands. So what you see here on Growth Focus, that the company took some debt, that is right. And now you have about, I don't know, $300 million, $400 million of debt. Right now, the company, as you see on Growth Focus, it's only 1.3 billion of market cap, but it's only including the Class A shares. There are Class A shares, Class B shares, and if you just type LandBridge stock, it will be in French. I'm sorry. You have a market cap of $5 billion. So Google is using Class A and Class B. Sum this up, and you have $5 billion of market cap. Okay, $5 billion. Very well. You can argue that, I won't elaborate on this one. That's a bit technical, but be wary of this. If you do your analysis, don't think that this is a complete cheat code and the market cap is only this. That's the Class A shares. You have other class of shares. I mean, you can look at the official document if you don't trust me. So you have a market cap of, let's say, $5 billion. $5 billion. That's a 5. And for TPL, the market cap is what? At the time of this recording, the market cap is 35 billion. Let's round this up at 35 billion. $35 billion of market cap. Very well. So you have basically a company that is 7 times smaller than this in terms of market cap, but the value of the land is not 7 times smaller. It's maybe 3 times smaller, 4 times smaller. So you start to see a mismatch here because we are talking about the same business model. You can say whatever you want. TPL is mostly focused on oil. LandBridge is mostly focused on water. At the end of the day, we are talking about the same business model. And this is what one of the key investor, Horizon Kinetics, is saying. If you want to learn more about LandBridge, here we go, Horizon Kinetics. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. Great. Check this website. Check this website, Horizon Kinetics. They have been investing in TPL for decades and decades. They have a founder, CEO, Murray Stoll, that is the most expert person on TPL. And if you look who are the owners of TPL, who owns the shares, you will see that Horizon Kinetics owns 30% of the shares that are publicly available, something like this. And they participated in the IPO. So Horizon Kinetics, the people that followed and invested in TPL for decades, participated here at the IPO price of $17, and are riding this wave. They have Horizon Kinetics products. If you look at their portfolio, inflation funds. What is this one? Horizon Kinetics Inflation Edge, something like this. Inflation Beneficiaries ETF. So their fund focused on inflation hedges. If you look at the holdings, you have TPL first, 9% allocation. Then you have this one, and then you have LandBridge, same thing, 9% allocation. So you can argue that they believe as much in TPL and LandBridge. Maybe they can't go higher than 10%. That's what I suppose. But you have a strong allocation. If you look at other royalty companies like a Viper Energy, you only have 6 or 7%. So yeah, I know that the weighing goes up when the price of the stock is going up, but still they could have trimmed the position. So it seems like this is a high conviction bet for Horizon Kinetics. They are experts in royalty companies. So you have this. Now there is another difference about the two companies. TPL is mostly focused on oil, and LandBridge is mostly focused on water. Now let's talk about AI. If you want to invest in AI, if you believe in the AI demand for this decade and the coming decade, you can invest in several companies. You can invest in Nvidia, you can invest in Google, you can invest in tech companies, or you can invest in the picks and shovels like chips or lands. In Texas, you can build a lot of data centers. Basically, if you believe in the AI trend, you believe that a lot of data centers will be built. How can you build data centers? Where can you build data centers? You want a lot of lands without any inhabitants. You want some vast lands that nobody uses. You want some cheap energy because data centers are not very efficient. They take a lot of energy, and you want water to cool things down because either way, data centers will create some heat, so you need water to cool things off. Texas is the perfect location for this one. In Texas, you have a lot of lands that is not used, vast amount of lands. You have cheap energy with very cheap gas, and they have water. And you know who is an expert about water? LandBridge. They work with some private company called WaterBridge, if I'm correct. Yeah, WaterBridge. And they have some agreements. They work with, they are expert in water. So you have the combination of a lot of lands, cheap energy, water, and as I said, they own contiguous lands. So you can transport water very easily. That's very good. This is the perfect situation. If you want to build a data center, this is the perfect environment. And LandBridge is here saying, welcome guys, come on, build your data centers here. We will more than welcome you. We will have the water, we will have the cheap energy, we have the lands. Come on. And seems like people are coming. In the last few weeks, we received some news that they already have plans to build the first data centers on their lands. And some analysts from investment funds highlighted that you could build in the coming years 1 data centers, 2, 3, 4, 5, 6, and they calculated the free cash flow that all these data centers royalties would generate. And I will not spoil you all the fun, but you can do some research and find the amount of free cash flow that all these royalties will generate. So basically, you have this company that is well located. They do some energy resources, solar panels, a little bit of oil, a little bit of minerals, but most of the story is about water and AI. That is what will move the needle if you invest in LandBridge for the next 5 years, 10 years. So, okay. Now they announced a few weeks ago an acquisition for more lands, as I said previously. So now they own about 250,000 acres of lands. And a few weeks ago, they had their latest quarterly earnings. And they said, okay, for 2024, our earnings grew on average 50%. EBITDA grew 50%. For the next year, in 2025, we think we will grow 50 or 60%. That is insane. And a few weeks ago, they did an update of the guidance because they did an acquisition of some lands. They took some debt and upped their guidance. And they entered an agreement with the data center stuff. I mean, you will look at it. And they upped their guidance to $180 million of EBITDA. So you get some 80% growth for 2025. Tell me 5 businesses that will grow 80%, that are almost sure of growing 80%. You will not find many. So if you look at the numbers right now, okay, and if you adjust for the one-shot event, one-off cost, IPO stuff, you have a company with some debt, okay, but you have a company with some cash flow. And if you normalize the cash flow, I did it so you don't have to go through the numbers. I looked at the IPO document, all the letters. I went and saw basically all the articles on the internet. You have the company that is generating a lot of free cash flow with very high free cash flow margin. So you can say that for this year, they might produce something circa 100 million of free cash flow. If you think that this business can have $100 million of free cash flow in 2024 and will grow to 180, you have a lot of growth. And if you look at the PE or price to free cash flow for 2024, they generated what? 80 million of free cash flow. They will generate $80 million of free cash flow. If you divide, I want to check the price to free cash flow. We said that they had a market cap of $5 billion. I'm thinking out loud. So 5,000 divided by, let's say 80. What did you say? 80. You have a price to free cash flow for this year at 62. Okay, very well. But we will soon enter 2025. So let's check. If you take into account the growth, they are likely to produce $100 million of free cash flow for 2025. I might be a little bit off, but maybe it will be 150, but we are directionally correct. So you divide $5 billion by 180 to get the price to free cash flow for 2025. You are at 27. Price to free cash flow for 2025 at 27, 28. And I mean, even if you take the lower range of their guidance, and instead of having 180 million of free cash flow, you have 150. You take $5,000 divided by 150. That's a price to free cash flow of 33. You have a price to free cash flow circa 30, around 30, compared to TPL that has a price to free cash flow through the roof. If you look at the PE ratio for TPL, it's at 80. Price to free cash flow, it's 100. Even the forward PE ratio, forward price to free cash flow for TPL is really expensive. We are talking about 60, 70. And for LandBridge, this is not the case. You have some forward PE, so forward price to free cash flow at 30. Maybe if you are a little bit conservative, you can go up to 35. and what will happen in 2026? That's a good question for you. If in 2025 they can grow 60%, 70%, 80%, what do you think will happen in 2026? Do you think less people will build data centers in Texas? Do you think the AI trend will decrease? It depends. If you think that data centers will be here for a while and the AI demand will grow and grow and grow, there will be more data centers in Texas. You will need more water, and that could be a good guess. And additionally, if you want to add a macro layer to the analysis, you may argue that because Trump is president in the US, you want to drill, baby drill, as he's saying. You want some big production, oil production in the Permian Basin. So more drilling, so more revenue for TPL and LandBridge. And because a barrel of oil needs, let's say, 4 barrels of water, you need a lot of water. So more production, so more revenue for LandBridge. So you have a lot of catalysts, a lot of upside with a valuation that is half of TPL. That is the thesis. If I'm wrong, don't hesitate to say it in the comment section below, because this is a small company, growing company, recent company. So maybe I'm wrong in my analysis. Maybe I have forgotten some elements. I'm aware that the analysis is quite recent, because the stock IPO'd, as I said, they IPO'd 6 months ago. So that even less. They IPO'd recently, so maybe I'm missing some information, but that's how I see the situation. So I have a small position right now in LandBridge, and I plan to add more on future dips. I will keep you updated. My portfolio is public. My eToro portfolio is public, so people can see live my trades, my investments, what I buy, what I sell, and that's it. I hope I gave you some clear indication of what is LandBridge and what is the investment thesis behind the company. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.